Okay, so yesterday basis, like on the previous session, we are discussing about the foreign exchange market, that what are the foreign exchange market is, and how it's going to be manipulated, and what are some of the factors which are actually manipulating the market, and what is the difference between fundamental and technical basis. Okay, so these on the previous session we are discussing about all those kind of factors. So on today's session, we are discussing about the three main things which are the main pairs to be traded in the foreign market. Okay. And what are the timing zones, in which segments the market has become more volatile. And the third one is the some of the principles which we are going to discuss. Like before taking up of any trade, you have at least 5 reasons to take why you are taking the trade and why you are not taking the trade. Like for an example, if I am going to take up the trade today in any of the pair, I must have at least 5 reasons with me before taking up of any trade or putting up of any initiative in the market. Okay, so these are some of the factors or some of the principles which we are going to discuss up in the today's session. Okay, I think till here we are completed geopolitical and geophysical reasons. Like what are the, in previous session we are already discussing about what are the reasons which are going to be implemented and which are going to be affected the market directly or indirectly. Like we have some of the fundamental reasons, we have some of the technical reasons, and some of the geopolitical reasons, geophysical reasons. It can be like that, which are implementing or which are affecting the market on the daily basis. Like today also you can see in some of the charts where are the volatility are there. Okay, because the forex market is there, which where the news are going to be coming up on the daily basis and on the scheduling of sessions. Like if we are going to see that mostly the market are going to be mostly volatile around 7 to 8 p.m. in the evening. In the evening, the most of the market, mean most of the major pairs are going to take up the volatility. Why? Because the market are going to be open up in that time. Like USA market, British pound market, going to be open up around 6 to 7 p.m. in the evening. Okay, so that time the market are mostly going to show you the volatility or the movement according to their time zones, or according to their you can say their news timings. So today what we have, let me open up the whiteboard for you. So this is the whiteboard, and yes, what are some of the major pairs which we are going to discuss? What are the major pairs? Today we are discussing about the major pairs in the market. Now the major pairs is going to depend upon the some of the factors, which is technically, it is depending upon some of the major pairs were depending upon technical, some of the factors which is depending upon the volume, some of the things which is depending upon the economic zones, and some of the things which is depending upon the liquidity, some of the things which is depending upon the political issues. Okay, so these are some of the like major pairs are also can differ according to technical zones, according to volume in zones, according to economic zones, according to political zones. For an example, some of the factors like in today, if we are going to see like the CAD pair, means we have some of the major pairs here. And what are the major pairs apart from that? Means these are some of the fundamental things which can affect the major pairs. Like what are the major pairs can be affected? Technically, market is going to be affected. Volumetrically, market is going to be affected. Economically, politically. Okay. Now, which pair mainly going to be affected is USD. Okay. And the second is Euro. Okay. And the third one is approximately, you can say, NZD New Zealand pair, and the AU is AUD means Australian pair. Okay, CHF. CHF means Swiss franc, okay, and the CAD pair means these are some of the major pairs which are going to be affecting the market on the daily basis. GBP is also there, Great British Pound, okay. It is also there, which is affecting the market. Means these are some of the major pairs, which are some of the major currencies which are affecting the market due to the technically, volumetric, economically, political zones. Okay, so USD is the main currency. Okay, if you are going to deal in the forex, if you are going to withdraw, if you are going to deposit your money, all the things are going to be taken care of with the help of USD is the major currency. Means America is the major country, or you can say USD is the major currency which is taken care of depositing, withdrawal of things in the forex. Okay, so these currencies are economically, politically stable. Okay, these are some of the currencies which are going to showing up, which are writing here. These are economically and politically stable, and they are also one of the most liquid currency in the world. Okay, liquid means you can show the volume, you can show the regular basis volume here. The market here is going to be traded upon volumetrically, and you can see the more fluctuations here. Okay, so these are some of the things which you can see up in the market on the regular basis. Okay, as they are in the mostly demand and these are in the mostly regulation form. Okay, the demand and supply of these currencies are mostly happening in the forex. Okay, so due to the high demand, due to the high supply zones, the chart is also reacting upon the daily basis. Okay, just a second, guys. So what we are discussing about, just a second, let me open the whiteboard. Yes. So these are some of the things which we are discussing. I hope these screens are available. Yes. So some of the currencies like economically, politically stable, and they are all of the most the liquid currencies in the world. So that's why they are mostly regulated form, and that's why they are mostly in the demand and supply zone. So due to the high raise of demand and supply, the most of the charts are showing fluctuations on the day by day basis, and you all are used to trade on the daily basis on these of the major currencies. Okay, for kind of example, what the forex is actually is if I'm going to talk about, if someone is going to ask me in the simple manner that what the that what the main the forex is. So the main forex is the comparing one currency against each other. For example, if I am taking care the things of all the five major pairs. Okay, so now I'm going to compare one pair against each other. For example, the USD is going to be compare a pound against euro. Okay, so this is the term currency. The second one is term currency, and this one is the base currency. Base currency is mostly taken care of in the trading, while demand and fluctuations. Okay, for example, in any of the chart, if I am drawing today one of the chart, just a second. If I'm drawing a chart here, okay, this is just a simple diagram. Okay, so this is the euro and USD pair. For example, this is the euro and USD pair. Okay, and the chart is going up in this manner. Chart is going up in this manner. Then what it is used to show? It is used to show that the USD price is going to be more. The demand of the USD is going to be more against euro. The euro is making a supply zone somewhere, and the USD is making a demand zone somewhere. Okay, and why this supply and demand zone are going to be creating, this is going to be creating, might be in that country some of the economical factors, some of the political factors are showing. Okay, some of the news are coming, some of the laws are implementing, some of the mishappenings, and some of the You can say some of the natural disasters are happening. So that's why the market is also used to be getting fluctuated. But why this market is used to be getting fluctuated? According to demand and supply zone of that particular currency. Okay. So accordingly, this is the base currency and this is the term currency. Always you have to be remembered that whenever you are taking trade in any of the chart, okay, first you have to see the base currency, that what is the news, what is the economical things, and what is the fundamental things of that base currency. If the chart is going in upside, that means the base currency is going to be stronger. Okay, if the chart is going to be fall, that means the euro is going to be in more demand zone. That means the euro is going to be, term currency is going to be showing the more implications on that chart, on that currency. Okay, so it is all about the comparing one currency against each other. Okay, so I'm showing you one chart. Okay, and you come to know about what I'm exactly going to tell you. Okay, just a second. Okay, so I hope that the screen is visible. This is the MT5 account where all you are going to be trade. Okay, this is a software which is connected to all the brokers. Okay, like you are depositing your money to a broker, and what the money is going to be regulated and your account is going to be open here in the MT5 account. Okay, this is the live chart which I'm going to show. And let me take the chart of GBP USD. Okay, and this is the daily chart. Okay, according to time frame also you have to take the decisions, because here the time frame is also going to be matter up. Okay, you can see there is a 1 minute chart, 5 minute chart, 15 minutes, 30 minutes, 4 minutes, and 1 hour. Okay, now how we have to going to be trade according to this time basis, because time frame is a main role. Time frame is also going to show up you a main role here. Okay, so basically now what we have a sum of the things, like depending upon the market situation and depending upon the market zones. Just a Okay, so basically what we are going to see up here in the daily chart, if you are going to minimize the chart, the more you will get the more claritical view of a particular chart. Okay, so let me take first a new chart here. Okay, so what we are going to see up here is the market is falling. So what we are going to see is GBP is going to be comparing against the USD. Means the what is the base currency here? Base currency here is the GBP. Means you can see here it is a GBP USD daily chart. Means what the chart is going to show up you all. The chart is going to show up you all the daily movement, the one candle is going to be make on the daily basis here. Okay, the one candle is going to be make on the daily basis. Okay, so what the chart is going to be show you, the chart is going to be show you the demand and supply zone of the GBP and USD, which currency is going to be stronger against which one. So here what you are seeing, the market is little bit, if the market is little bit falling, the GBP or the USD is going to be stronger against each other. Means if today the market is going to be fall, somewhere the GBP is going to be lose its volatility and its movement against USD. Okay, and if the chart is going to be rise up, it is all about the assumption. I'm not telling you the exact prediction right now. It is a kind of assumption. Okay, so if the chart is going to be rise today, okay, if the GBP USD chart is going to be rise today, what will happen? The USD is going to be lose. Means the supply zone is going to be increased of the USD against GBP USD. The GBP USD demand is going to be increased, and the USD means the dollar rate is going to be down and the GBP rate is going to be high. Okay, so this is all the main scenario we used to see here. Okay, so what we are going to see here, that the GBP par against USD, or you can say the term currency par against base par, or the base par is against the USD par. Okay. So what we are discussing, what are the main pairs? This is one of the major pair, GBP USD, and the next one is, you can say, Euro USD. This is one of the main chart, which you can see the market is falling. Okay. Um, if the market is going to be falling in today basis, in the today's prediction, what if we are saying the market is falling, then what we are saying that the euro is going to lose its volatility against US dollar. The US dollar is going to be rise up and the USD is going to be fall. Okay, now the one thing which I am going to show you up here, what like for an example, if today the euro and USD is going to be fall. Okay, apart from that, what we can see, if the USD is going to be fall, euro USD is going to be fall, means if the term currency or if the base currency is going to be loses volatility, against that, if the USD and CAD is going to be rise. What it is just a kind of contradiction. Okay, like if the USD is going to be lose its volatility here, it's going to catch its volatility here. Means if it is going to be fall today or it is going to be rise today in some of the term zone, then in the base zone it is going to be it is going to be rise up. Okay, in the same what we are going to see up here also in this chart, like here what you can see, the market is little bit of rising in the euro USD. Why? Because USD, it here is a term currency and euro is the base currency. Okay, apart from that, if you are going to see any of the currency which is a term in the form of euro, okay, you have to find, so in that currency we are seeing the euro will going to be rise, mean it is a kind of contradiction. Okay, if the one currency is going to be fall, the other currency is automatically going to be rise in the apart, in a vice versa manner. Okay, so just let me take it. Yeah, here is some of the opening and closing zones of the some of the currencies and the some of the country. Okay, and we have some of the major five main areas of the forex. The forex is basically distributed in the four major zones, or you can say in the five major zones. So some of the, it is Sydney, Tokyo, Frankfurt, London and USA. London and USA is basically of the Asia part or Europe part. Okay, so mostly what we have to see, when the market is going to open or when the market is going to be closed, that time the volatility is mostly higher. So if you're going to take up the trade on that particular time, you have the particular sorry, you have the particular amount of profit and you can get out of the market. Okay, you can book your profit at a particular time during the opening and closing time of the session, and you can just come back out of the market. Means you can make the profit at a particular time. And what are the particular timing zones are, means a Sydney, and Sydney's opening time is, Sydney, you can say it is Australian pair. Okay, Sydney is the Australian pair. Okay, what's the main opening time is 2:30 to 10:30 a.m. You can take up the screenshot of this thing. Okay, because whenever the market is going to be open at a particular time zone, the main, that time the volatility is more higher. Okay, and when the market is going to close, that time also the volatility is more higher. Okay, so that is a particular thing which we are going to use up in the market, and these are some of the strategy, like what are timing zones. According to timing zones also, you can make up your profit also. Like if you are going to take up the trade in AUD, so you have to search out what is the opening time of that market and what is the closing time of that market. If you are going to take up the trade in, like I am saying, in euro or in GBP, okay, so what is the main time of here is the USA market. USA time market opening time is 2:30. Sorry, this is 2:30 a.m. This is going to be 2:30 a.m. Okay, so this is some of the opening and closing time of some of the particular market, and these are five main zones which are distributed all over the world, and these are some of the five major currencies of the particular country. Okay, so just take the screenshot of this. This will going to help you in later. Okay. Everyone taken the screenshot of this thing, market opening and closing session? Please give me a thumbs up, or please write it on the message box. Okay. The next one is, what are the reasons of losses? We can see there are some of the common mistakes which most people make in one on another way while trading and investing in the market. Of course, like, what are the forex is? Forex is like somewhere or the sometime you are heard about your neighbor or from your friend, like, yes, I'm making today's profit and I'm making the profit through forex. You have heard in YouTube, you've been heard in social medias. Okay, so these are some of the facts, like, yes, they are making the profit, but how the profit is going to be making is the main factor here. Okay, so the main thing is here is the knowledge and discipline. The bitter truth is here is you have to maintain a certain kind of knowledge, is of course you have to be maintained in that kind of manner, but the discipline is also used to be maintained while taking up of any trade, because one trade is going to be run according to 1 week or 1 day. Okay, the market is here, the market fluctuation is more than anything, like it is one of the oldest market, and so that in that kind of manner the fluctuation is also a very high manner here. So on that kind of basis, you have to be more disciplined, you have to be more knowledgeable, and you have to be learn certain kind of factors in the market, or you have to mm, believes upon the patience kind of thing. Okay, so all these kind of things which we have to maintain in the market. So what are the basic mistakes? Like I used to told you, we have to maintain some of the five thing in the market, some of the five reasons in the market, or you can say some of the principles also in the market, which also uh, going to be help you in the later up of session. Like whenever you are taking up the trade something, you have to put up your mind before taking up of any trade, and these are, you can say, some of the psychological things of the market. Okay, so no judgment on the trend. Like look, guys, here in the forex, what one is the main factor is make the trend is your friend. Okay, now what is the trend here we are going to discuss. Okay. Now the trend, what is equals to trend? Trend is equals to a direction here. Okay, trend which are running in the market for the long time of zones. Okay, like if something is on trend, so it used to be run up in the market for the long time. Okay, so that thing is used to be the same thing is used to be implementing here. Like if the market is following a such trend, okay, we have a two type of trend here. One is buying trend and one is selling trend in the market. Okay, then if the market is following a buying trend or the selling trend, so so it is definitely going to be follow up for the long time of zones. Like if the market is following one trend for the 1 week or 2 weeks, then afterwards it is going to become a trend. Okay, now the trend is simple manner following a certain direction for the long time of period. Okay, so that is used to be going up the trend. If the market is following this trend, like in this way, what is this way is the market is going to be making up of buying sessions, a buying swings in the market, a buying pressure in the market. Okay, so that's why what you have to take, you have to find up the buying direction, you have to find the buying trade in the market. Okay, first make a mind your that way, like what trade you want to take up in the market, whether it's buy, whether it sells. Don't get confused. The first thing which we are learning in the market is trend, means trend, in which trend you want to take the trade. Okay, so trade is going to take up in a particular direction which the market is following for the longer time. Okay, so if I'm going to show up you a particular chart here, for example, this chart is I'm going to showing you up. It is a Euro USD daily chart. So what's the trend is here? What's the trend is here? Guys, can you answer me what the trend is here? Anyone can answer what the trend is going to showing up in the chart? this direction. What this direction is used to signify here? This is the buying direction. So the trend is going to be discussing up here is the buying trend. Whenever you are taking up the trend in the market, what you have to see a particular direction which the market is following, which is a very simple thing. Okay. In the chart, take a daily chart and just the squeeze up that kind of chart, just minimize that chart, and apart from that just see the trend, like what the trend is going to be followed the market in the longer time period. Like the market is following the buying trend, so what the trade that we are used to take, we also used to take the buy trade in the market. Same. Okay, so this is the JPY chart. Okay, the another chart, and what the trend the market here is following for the longer time of period. The market is here is following the downside trend, means the selling trend. If the market is following a selling trend, then also you have to search a sell trend in the market. Okay, what the one thing which I'm going to discuss, the market is moving. It is a GBP JPY chart. Okay. And if anyone is having a kind of account, you can put your trade in GBP JPY with the 0.01 lot. Okay. If anyone is the older trader, okay, and this is a kind of live chart. Okay, so you are going to put your trade in the GBP. This is one of the live signal which I'm going to provide you right now, which is a GBP JPY sell trade. Okay, the market is going to be little bit falling. You can make your TP or SL up to 15 to 20 pips down. Okay, so this is a live trade. Okay, you can imply it on your chart. So yes, guys, I think you all are heard my voice. I think there is some of the issues. Yes. So apart from this, this is another chart, which is the NZD-USD. Look, I'm just going to discussing here about the trend, and the trend is simple thing about the direction. And what's the direction? Direction is which is the market is following for the longer time of period. Okay. So this is the NZD-USD daily ka chart. Okay. So here what the market is following a daily trend. Okay. So the mostly trade watch we are going to take up here is the buying trend. Okay. The buying trade which we are going to take here. Okay, and it is a which chart? It is a NZD USD daily chart. Okay, same thing. This is the CAD JPY, means the Canadian pair which we are comparing against the Japanese pair. So what here we are seeing the market is falling, means the trend is down. Okay, the trend means the direction is down. Okay, look, the direction is down. Okay, so this way what we are going to see, the base currency is going to lose its volatility against the term currency, means Canadian pair is going to lose its volatility against the Japanese pair. Okay, so this is all about the trend. The trend is the very first thing and is a very important thing. Whenever you are going to take up the trade in the market, you have to keep it in mind that what the trend is, what the direction is first, and then you're going to take up the trade. Okay, guys. So that's all for today. Okay. And the later we'll continue with the Tuesday class. Thank you so much, guys. Okay, guys, I'm ending up the session. Thank you.